Apparently cannot be heard. I don't know why. Is it okay now? Okay. Strange. I did nothing. I didn't change anything. So except here, I don't know. Very strange. Okay, anyhow. Risk disclaimer explaining that trading foreign exchange is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video is for educational purposes only. So I do thank you for your attention on that. And welcome you once more to our live trading room hosted by Admiral Markets. My name is Chris. Today we're going to take a look at intraday trading. Tonight we also have an educational webinar, by the way. That's always on Thursdays from 5 p.m. London time. And we'll be taking a look at risk management. I definitely encourage you to take a look at that because you're going to find out some new equations that you might not know. So I definitely encourage that. We'll be taking a look at intraday trading, as I said, and our focus is always defining a trend, checking for divergence, Fibonacci levels, support and resistance, establishing a trend bias, looking for a pullback, and then finding an opportunity to trade that. Make sure to take a look at Admiral Markets as well, Twitter and Facebook. With that said, I think I'm going to introduce, let me just check, our manager here from Admiral Markets, in fact, Michael.
Good morning, guys. Thank you very much for a lovely introduction, Chris. Once again, this is Mikhail Onokhov, the Client Relationship Manager for Admiral Markets. I will now change over to my screen. There you go. Here are my contact details. Please look me up on Google, and you can find my LinkedIn page. You can always email me on this email address, phone me on this phone number, and Skype me on this Skype account number. Once again, we're going to be talking about very interesting concepts later on. But for now, let's take a small detour and talk about something that is a little bit different. Let's take a break from charts, numbers, and currency pairs. Let's forget for a minute about Japanese candles and Fibonacci lines. Today, I wanted to speak to you about something that applies to every single one of us. I wanted to speak to you about self-improvement. Self-improvement and personal growth has been a hot topic for a number of years now, and that is understandable. In this day and age, you must grow and develop yourself on a constant basis. We rely on books, we develop ourselves in schools and universities, and we carry on with self-development in our professional careers. It's just like an investment. A price of a future is always worth more than a spot price. And you in the future must be smarter and better equipped than you are today. Otherwise, a future you stands no chance. All of you took time today to attend this webinar precisely for this reason, to develop yourself, to learn new things, and tomorrow, after you watch this video, you will be smarter than you are today. But I would not advise you to stop here. You have entered a new world, a world of investment, where money is made and lost, a world that is a battlefield for the brightest minds of our generation. Some of you are just considering to enter this new and exciting world. Some of you have taken some steps in order to explore it. Some of you are living and breathing investments. To those of you who are still considering to invest or not, well, you should consider the following. Once you enter the world of investment, you will change. And you will never be the same again. You will be better. Not only does investment give you a chance to learn, because no one guarantees you that you will earn in the investment field. No one can guarantee you will win. But what I can promise you, though, what I can guarantee you is this. Your horizons will broaden. Forex is a demanding investment field. You will be required to follow the news, and you will be surprised how much involved in current affairs you will become in just a few weeks. Your technical and fundamental analysis will give you information in order to make correct split-second decisions. Your analytical skills will improve, and this is a tool that you will be able to use not only in the financial market, but in all aspects of your everyday life. Decisiveness. Forex trading is all about the decision making. A second can separate a profit from loss, and you will learn this skill. You will be one calling the odds, and you will take this skill from the financial market, and you will be able to apply it to everything in your everyday life. After all, isn't life all about decisions as well? You will see for yourself. It will no longer take you 10 minutes to choose a meal in a new restaurant, and that's just going to be a modest beginning. It will get a lot better after that. But most importantly, one day you will take a loss. It will happen. And once it happens, you will learn the most important skill, self-discipline. Believe me, money is a great motivator, one of the best motivators there is. And it will teach you that a profit is not a product of luck. It's a product of hard work and dedication. Those of you who invest regularly will agree with me. Investment is a trip worth taking. Mark my words. Register a real account today and make your first trade and see what happens. In a year, you will be able to look at yourself and you will understand it was not just a financial affair. It was a great learning experience. Some of you will make a loss. Some of you will make big profits, as a lot of traders do. Your lecture today is actually a great example of that, but all of you, 100% of those who enter the world of investment and forex trading will be a better person. Knowledgeable, decisive, disciplined, I can guarantee you that. If I could buy a derivative on you, I would long you in a heartbeat. So register an account. Our minimum deposit is just $10, and see how you in the future will be worth a lot more than today. That is something that I can promise. If you have any questions, you can always ask me on all those contact details, or find me on Skype or LinkedIn. I'll be very happy to answer to all of them. Thank you very much. It's been Michael Orachov. I will now going to be passing the microphone over to Chris, and he will take over with this webinar. Thank you very much.
Thank you so much, Mihai. That's great. Great words there indeed. Motivational words for us. And always good to hear Mihai and his view on things. In fact, I just wanted to repeat maybe the first sentence I was talking about at the very beginning, because the sound was apparently not optimal, but I was just saying that we have an interesting day coming up, a day with a lot of volatility because of the euro and pound interest rate announcements. And we also have USD ADP non-farm employment change. Those things do tend to be, have the potential of making a firework show out of the currency and price movement. Tomorrow is NFP on the USD and the unemployment rate as well. Now, it is maybe a cliche for you. Hopefully it is. For those of you who find this new, then you should be aware that there's just a different type of day. This day is not a technical day as a normal day is. This day is a news announcement day. That means that people talking, people writing statements, every word written, every word spoken is going to be weighed, is going to be interpreted, and is going to be judged how that will influence price. And that's going to be really the main driver of the market today. And key levels are not going to be supported as they are in normal trading. If you're a big position trader, you might want to take a position in the direction that you think the long-term trend is, but those people take very long, wide stop losses. Scalpers or fundamental traders, that's a perfect environment for a person who wants to trade maybe the news event after NFP and trade really the aftershock of the environment. But for intraday traders and swing traders, it is a very harsh environment, a brutal environment that is risky in general. So nothing you can do about that. We have 35 minutes from now, we have the Bank of Japan press conference. definitely want to avoid the yen with the press conference. That could be everything. Who knows what they're going to say. So maybe best to avoid that. Not maybe, but for sure. Then we have 4 hours from now interest rate announcements, of course, as I already discussed, and the pound and 4 hour 50 euro. Then 5 hours 20 ADP. Then 5 hours 35 USD jobless claims and the ECB President Draghi speaking. Heavy agenda today. Tomorrow, as I said, NFP and unemployment claims. If you want to take a look at NFP trading, we did have a webinar on that. So just go to education at the Admiral Markets website. And go to video archive. And I'll find it for you. NFP strategies. It's a bit further back than I expected. It's from the 18th, dating the 18th of April. Time flies. Alrighty, let's go to our charts. No problem, Anise. It's good to get those reminders indeed. So I personally will be preferably trading something that doesn't have the euro or pound in it, or at the moment actually the yen as well, because of that press conference. Now the yen would be okay maybe an hour after the press conference, but the whole day preferably will be avoiding the euro and pound. The dollar is a bit different. The dollar, such as the dollar CAD or odd dollar or the New Zealand dollar or the odd New Zealand, those are currency pairs that don't have euro or pound. First of all, the dollar does have news, but that's a while from now anyhow. So short-term trade, an intraday trade, which is our focus today, would fit within the time frame that we're looking at. But from a just quickly from a bigger perspective, we're looking at the euro dollar here on a daily. We had a small upside daily candle yesterday, small bullish candle. Within that down move, currency was moving down from 134.50 to 131.40. We made a small move up and already moving down. So question is, will we get that bigger retrace that I was talking about, or will we just fall in one straight shot to the bottom of that weekly wedge or daily wedge or weekly wedge, indicated by this pink line? It could be a bit lower as well. So about, just above halfway approximately. I said a retrace is nice. Well, we got some retrace. Question is always if we get a bigger one back to the top of the trend channel, but that doesn't necessarily have to happen. All right, so yeah, I'm going to move on because I'm not going to trade it, but that would be a normal, in normal circumstances, that would be a trend line that we could look at. Let me take a look at the Camarilla. Not that I'm going to use it, but just to give an idea, or to get an idea. You see our trend line, in fact, if this were a normal day, we would be at the L4 breakout, so there would be a small trade here on an intraday if we do break to the L5. Pretty strong down move so far here on the 1 hour chart. Our oscillator here in the top right corner, those oscillators on all time frames are red. And on the 4 hour chart, in fact, the Fibonacci confluence has moved down to lower spots on the 4 hour chart. And in fact, we're right at a support level as well. So if we do break, we could fall here right upon the break of that Fib confluence. These candles are still all red, the 1 hour, the 4 hour, and the daily. Oh, no, it's not the daily, sorry. But it is red, the daily, 1 hour, 4 hours. So technically in a downtrend, but anyhow, that's just out of informational purposes. I'm going to go to take a look at the pound quickly, and I will move on to something that might really make sense to look at. Let's see, did the pound stop at the 786 fib here? Yes, it did. Look at that, right at the 786 fib. That's why it's always good, to, even though we're in an uptrend, sometimes it makes sense to put a fib in the opposite direction to see where that currency will stop. Where is that resistance? If it does continue with the trend, where is that resistance? So that's the pound right now. I'm really only interested in longs above 157.50, above 157.50 to 160. Or shorts below this support level, below 154.20. Initially down to 148, 149. But I think if it breaks, it can go down to 140, low 140s, maybe, depending on how much speed there is, maybe even to 130s, and get double bottom on the monthly chart. Okay, so those are the levels I'm looking at. Okay, I took them away. I hope you saw them, but if not, let me know. Let's take a look at something that is more of importance to me, or I hope for you as well today. Dollar CAD maybe. Take a look at that. This is the 4-hour chart. We're still in this uptrend channel. That's actually a day channel. Now, is that a nice day channel or not? Beautiful. It's really a beauty. It's one of those that is well established, and that's one of the reasons why we like the longs so much when we did retrace back to the bottom. And the reason why it's nice, does anyone know the reasons? Is anyone in an interactive mood and want to jump in here and tell the others why it's a good trend channel here on the dollar CAD? Bonus points if you do. Let's see if anyone knows the answer. I think I'm sure I mentioned it in the past, but it depends if you were present at the time. We also have a webinar, by the way, on trend channels. Let's see, where is that? Trading trend lines and channels, 27th of June. Very important. I mean, all of them are important, but that's a different subject. No, well, supply and demand, that's not, if that's the answer to the question, I don't see that wouldn't be what I'm looking for. Supply and demand is definitely very useful for analyzing the charts, okay? For those of you who don't know what it is, it's basically you have an up move, for example, and you get a sideways box like that, and you get a continuation. That range in an up move is basically supply demand. So if it then hooks back, if price hooks back to that zone, it's a high likelihood of a bounce. Okay, the higher the time frame, the more likely, and the bigger the bounce probably will be. Okay, so that's the supply and demand zone there. the red box. So I'm going to take that drawing away. If you're multitasking, it's your last chance to take a look. No, there's another reason, and I'm kind of disappointed that no one knows. But you know, first of all, we have 3 hits. That's an established trend channel. Hit 4 and 5. We got a good angle of the trend as well. Right? So those 2 things, plus, but we don't add, because I don't want to overcrowd the chart, but a good middle line with the price respects as well here, as you can see, is also very important to confirm the trend. Okay, so now you know that. If I ask next time, I want to see more answers here. Dollar CAD. Let me take the green line off here. So good trend channel, okay? But the moving averages also, they confirm the same. Do you see that? Price is pulling the moving averages that are band away, and eventually they're pulling it away from the longer moving average here. See that? Then if we correct, it pulls the moving averages back, but then we bounce away and move away from it again. We pull it back, we're bouncing away. So right now, I do think we have a move up, but the problem is that if you look at the week chart, we're right at weekly resistance. So there's not much space there, okay? It's just right at 106. But we still have some space up to that weekly trend line there. You see we had hidden divergence here, hidden bullish divergence, that is. Right now, it looks like we're making an ABC flat, because if we put the fib on this down move here, you can see we hit the 86 fib. That means that we're making an A, B, and the C could stop here. It could stop a bit lower, maybe, at the 50 to 272. So that's something we have to consider. These 2 could be the bouncing spots for more upside. So if we then zoom into the 1-hour chart, we're potential bouncing spot, but we're not sure. So in that regard, one way of tackling or approaching this, there's always 3 ways of entry methods, right? Yesterday we spoke about the fact that 1, the first step is defining the trend. Well, we've defined that that's an uptrend, right? 2 is the opportunity. What is the opportunity? A pullback. Well, we have that. Within the trend, we're making a pullback, right? We have an uptrend, but we're making a pullback. So step 2, good. Step 3, filters. Well, we identified the fact that there is a weekly trend line, but we also know that there's enough space to that weekly trend line. So as long as we know that, that's good. There is a weekly trend line that could be a filter, but it's not, not close enough to bar us from this trade. Step 4 is the entry methodology. Right? This is what we talked about yesterday. But there are in fact 3 ways of entry methodology, and that's what I'm going to discuss or show you now. Is first is level picking, right? A level. Just pick a level that you think is a key support or resistance. Second is waiting for confirmation. That could be engulfing twins, any price action, or candlestick pattern. Okay, confirmation. Step 3 is a momentum trade. And momentum traders are waiting for a breakout. because that's when a breakout occurs. That's when there's a high likelihood of the currency moving our way. All right. So, level trading is more difficult. That's like trying to jump on a train when it's moving 200 kilometers an hour. The confirmation is easier because you know already that the train is slowing down or picking up speed. So it's more like jumping on the train when it's like 40. Momentum is the easier because it's already a confirmation that the train has stopped and the train is going back in your direction. All right. But momentum traders do need a lot of patience because breakouts don't occur all the time. Well, everyone needs patience, in fact, but okay. So, what kind of options do we have here? So, a level could be right here, actually, right? Could be right here because we are at the bottom. Now, I'm not a big fan of level trading, so you won't see me do that often. Personally, I probably would, an entry order at the 272 target, that could make sense. If you take a level, if you are a level trader and you take a position here, you can either take a very aggressive stop loss, that would be a very tight one below here, but then you do have that risk that the currency will retrace deeper, or plan a deeper stop loss below the 272 target, maybe 20 pips below there, or 30. But that also increases the stop loss size. Let's see how much. 104.10. Now it's 104.80, 80 pips. 104.90, 80 pips. Our target is 106. That's 110 pips. 110 versus 80 is a 1.25 reward to risk. Not that great. Not bad either. Could be better. Right? How about this one? This one is a lot, of course, tighter. But the odds of the trade succeeding are lower. So those would be the choices a level trader would be facing. How about a confirmation trader? Well, let's take a look at the 4-hour chart. Do we have any price action signals saying that we could reverse here? What do you think? That's the day chart, by the way. 2 bearish days. The high is 105.40. The low is 104.70. It's a 70 pip candle. And the close is 18 pips off the low. What that means is that 25% of that candle is a wick, the daily candle. 75% of the candle is the actual candle, or the top wick, right? Is that a lot of buying pressure within that daily candle? Do you think that's a lot of buying pressure if there's a 25% wick? So we got a split vote so far. You want to do the tiebreaker? I don't like break evens or tiebreakers. So we need a decision here. We need one more vote. Yes or no? Not the same voters though. And both of you voted the same. That's funny. So it's still a tiebreak. Nice try. Nice try, Graham and Tasha. And he says yes. In my opinion, not much. So I side with Graham here. Sorry about that, Anish and Darshan. Thank you for all your votes, though. I don't think it's much buying pressure there. 25% is not what I consider major. I would say anything above 33% is, that's. I know it's just a number here, and it all depends on situations, but that's what I typically want to look for. 50% is, of course, a lot, definitely. So 25 is still relatively bullish or bearish in my opinion. But okay, that's just a daily candle. We also have a chart pattern to look at, and that's of course why we're analyzing this whole situation anyhow. I missed Anis's comment, by the way, who said it looks like Andrew Pitchfork. That's definitely true, indeed. And I'm out of the dollar CAD position, indeed, Anis. Yeah. Because for me, anyhow, the 105 was the target, because 106, 106 was the top, but I wanted to be a bit more conservative. And we didn't reach 106 so far, right? We went to 105.68. So that sometimes happens. That's why I don't usually aim for the exact level, just because the currency can stop or tends to stop, has the potential to stop just shy of the actual target, because there's no one willing to push it, exactly to 106. No one's going to buy it at 105.70 with a potential 30 pip target and a sea of pips behind them. Anyhow, let's go back. 4-hour chart, I think, does, by the way, because we have a small bullish candle. Now, for me to consider that a bullish reversal candle is, I feel a bit uncomfortable to do so. Yes, I do recognize that it's a bullish candle. I do recognize we have a wick at the bottom here. We had some candles going down, didn't we? We had 1, 2, 3, 4, 5, 6. No, we had a number of candles going down in the 4-hour world, and we get a bullish candle like that. That could be a potential bullish candle. It could be. Now, somehow, it doesn't convince me too much. Not even sure why, but it's maybe too small. Maybe, I don't know, it's not convincing me. But in any case, the idea would be, if you are a confirmation trader, and let's say you would like this candle, then you could take it on the retrace of that candle, or the close of the candle, or the break of the high. Those are the three options, right? As a confirmation trader, even as a confirmation trader, you have further choices. And in most cases, the stop, the more conventional stop loss, the usual stop loss would be just below, under the, either under the low of the candle or 12 pips below the candle. So this is kind of like a review for you, what kind of entry possibilities you have and stop loss possibilities. Okay. Good morning, Elkana. Good to see you. Glad that you can make it today. That's great. And Daisham, what I meant was that I believe that if there's a wick, if the wick 25% is 25% of the candle, I don't consider that overly reversal signal. I would need more wick. Okay. For example, here it's about 50%. This candle over here, I'll put a green circle around it. That wick is about 50. That I do consider, a big pressure or buying pressure there. Right? Even though it's bearish close, there's a lot of upside pressure there. But anything less than 35, I would just still consider a normal candle, even though the close isn't maybe as close to the high as we would like to. Usually, of course, you want the close to be as close to the high or near the high or low as possible, because that signals that that particular group has kept control of price within that candle, within that time frame. Okay. So if it's a few pips off, actually there are traders who have strategies geared towards that, geared towards candles being close to the high, and then taking that continuation trade Alrighty. So that's the confirmation trader. The momentum trader could be thinking of trading the dollar CAD when it breaks, when it gives a momentum confirmation in the sense of a fractal break or trend line break or a moving average break. Right? So we continue our entry methodology of level one. Method one is the level picking. Method two is the confirmation. And now we're discussing point three, the momentum traders. Right? Momentum trader doesn't really have a good trend line to work with the dollar CAD, in my opinion. We could put a trend line like this. We could put a trend line like this. But obviously, the latter trend line, which I'll put in purple, that is obviously, and I hope you see it too, it is too steep to be a real trend line. I'm not saying that steep trend lines will never work, but I prefer shallower trend lines, or at least trend lines with a 45-degree angle. So trend lines, not so much here, but maybe our moving averages. So let's take a look at that. We do have a lot of lines in the meantime. So let me clear the chart just a bit so you can see it a bit more. Let's take a look at our 4-hour moving averages. We have the band on the 4-hour chart. Price was above the band, right? Now breaking below it. But we're still above the longer term moving average. So price is in between that. Let's take a look at the daily chart. Still above the band, right? So on a 4-hour chart, we would probably want a breakout up in here. That's a bit, that we know that the reward to risk is a bit iffy. So let's move to the 1-hour chart. Here we have moving a band above us, right? So it is a potential breakout if we would maybe make the first higher high on the 1-hour world. If we break this fractal, for example, that could be already indication that we're going to make that upside. But probably the best one would be if we break above the band, hook back to the band, because then the band will start to turn, and then use this band as a bounce. And the next break, if we have a trend line or the next fractal break, that is actually more of a momentum trade. Because then our trend line will be maybe something like, there would be a trend line like that has a better angle. That is the momentum trade, in fact. So we really don't have a momentum trade at the moment. It just doesn't exist. We need actual price to go in our direction and then take the next one. If anything, does everyone see that? Does that make sense to everyone? Great. Anis says yes. If anyone wants a extra clarification, good. Good. Or if you see it differently, everyone has their own views. But this is how I, interpret entry methodology step 4. Okay, good. So what we do have is, a break of this fractal is not necessarily not a good trade. It's just I would classify it as a category 2. That would be more of a confirmation. That would be a confirmation entry, if anything. Yes, I can imagine that Some still, not maybe 100% sure about those concepts. So I'll just give you a quick review. Once again, it's more about entry, how to enter. How do you enter? You pick a level, a major support and resistance, and are you so sure about that level that you want to put an entry order there? That's level picking. It's more difficult, requires more experience. Option 2 for entries is confirmation, waiting for a price action signal, like those 4-hour pin bar here, or a fractal break here on the 1-hour chart. Step 3, and in some cases that could, there's some similarity with the confirmation, but that's momentum. But the difference with the momentum is that you have more likelihood if that you break that you are continuing with the trend. Something like this. Because we have a good trend line. A good trend line break, and we are breaking out of the moving averages as well. When we're really trading with the trend and with the impulse, that would be a momentum entry more. Alrighty. That's the dollar CAD there. Now, so me personally, I will wait for this 15-minute world to make a spike up, make a bull flag here, and take a bounce. So that's my trading plan. We can keep an eye on the 15-minute world and see how it goes, okay? Let's take a look at the odd USD daily chart. Well, it's at the top, obviously, if we zoom in. If we look at our band, and I really think the band is very useful, and I recommend everyone using it because it's just, look at this daily chart. Where does price stop? Usually at the band, or if it doesn't, then it just peeks through. Actually, it did peek through yesterday, and it peeked through only the second time since the mid-April, or yeah, maybe the third time. This time it peaked more. It was 100 pips. So this time it was a bit more than usual, with a bullish close outside of that band. Well, that might signal, plus the fact that we do have divergence. You know that I'm never a reversal trader. But the odd, who knows, maybe we could make a bigger reversal back to the long-term moving average at 95. The band are 34 EMAs. Everyone can put it on. There's nothing magical about it. They're just normal EMAs, by the way. And it's a 34 EMA close. But the difference is that it's also a 34 EMA high and low. So that's all, basically. No problem. And so for me, that is just speculation still. If you look at the facts, we're right at, if anything, we're right at the top of a structure, maybe of this triangle, for example. Could be. We're at the top, obviously. 92.30 is a daily top, and we're at a trend line as well. So despite the aggressive up move, we're at resistance. We never go long in front of resistance. Believe me, traders who are profitable don't do that. All right, unless you still have a few pips to scalp here. I'm not saying that scalpers couldn't get a few pips there to the upside, but if you're right at the trend line, it doesn't make sense. So let's take a look at, the 4-hour chart, we have to keep in mind we do have daily divergence, and an ABC up to the long-term moving average is possible. All right. Now, even though that's possible, we could respect the trend line, make it dip back, a pullback, and then go there, right? Or maybe a single divergence on the daily chart is not enough. This trend is so big, we still break one more time. Let's go to the 4-hour chart. We have a pretty neat trend channel here. Although the bottom is, the angle is quite shallow. We have price hanging out a bit there. That's fine. You can have overthrows and underthrows in trend channels. The 4-hour band is good, but we can see that it's been a bit more choppier since here onwards. But our band has never crossed the long-term moving average. But price has been bouncing. You can see this is more of a range environment in a way, but it does have an angle to the downside. Now price didn't make it above the long-term moving average. If we look all the way from the beginning of April, and Al-Qaeda knows that, I hope you don't mind Al-Qaeda, but he knows that I was shorting it, advising to short it right in here, I believe. Or was it here? No, I think it was here, in fact. and that happened live. You remember Al-Qaeda? That was a cool one, wasn't it? Yeah, that was nice. Right before that fall. Anyhow, the long-term moving average really gave a good indication of the speed of this, because we had some spikes up, but the price never went through it. You see that? It broke the band sometimes. In most cases it didn't. Sometimes it did. If it did, the long-term moving average held it, just like it did here. Although now we're seeing a bit more signs of weakness, because here we had punched through it, and now we're having a bigger punch, right? So time will tell. But this downside is has a good potential, even if we bounce off the band to the upside. So downside could make sense here, because we're at such a big resistance. So a level picker, once again, would have picked the top, or would have picked the trend line, or would have used the Fibonacci to enter at the 786 or the 886. A confirmation trader would have been looking for some price action signal or a break of this fractal. A momentum trader wouldn't be really trading now, because the momentum is up, not down. So what would have to happen for a momentum trader is a move down, a bear flag, and then the break. That would be the momentum entry right there. The long-term moving average, no, the band is around 90.60, where we have obviously a supply-demand zone here as well. We have a small one here too, by the way, but that's quite small. Could be good to know about. We have the band on the 1-hour chart just at our feet right now. You see that? So, with We did break the fractal though, so that could have been a good signal actually to go short as a confirmation, right? 91.54. Now we're only a few pips below that, so we can, if we like, we could think about this. Let's take a look at the 50-minute world. 50-minute world is more looking like a bull flag at the moment, which wouldn't be a good selling signal as is. I think I'll move that key green line to lower, because if we fib, for example, this entire up move, even if we do get an ABC, it will likely happen at a fib. So anything above 382 is probably too shallow a retracement. So we do have that. I think we do have that space down here, at least to that. Got double top. This is the 15-minute. I was looking at the 1 hour before that. 15-minute had the double top there. And a break of this support level. Hook back, continued. Quite choppy so far. I think it makes sense. Just the question is, do you want to take it here at do we take it here at the break? Do I take it here at the break, or do I let it break and continue? But in fact, we already had a break right in here. This is the pullback, and we're already in the continuation in a way. Just like that. So I think a short makes sense, but what I'll probably do is I'll plan it on a 1 hour chart. We have this 1 hour candle closing in 22 minutes. So maybe one way of doing it is letting this hour close. That would be nice to have a bearish close of that hour candle, and then wait for a retrace about halfway. That could be one way to tackle this. To get a bit better entry, let's see, this candle is 91.62. The low is 91.44. Halfway mark is then 91.52. Okay? Something like that. Ow. I hit my knee there. One of the reasons for that is you can see that most of these candles retrace each other also. You have to realize that all these time frames are retracing each other. So you usually have time to plan what your favorite entry is and what your favorite spot is to take a trade. You could even plan a retrace on the 4 hour chart. That's up to you. Depends how far you want to go. But at one point in time, of course, the currency is going to move. I mean, it does retrace, but then it does move on at one point or another. All right. For example, here, if we look at the 4 hour candles, we had a bullish candle, we had 1 hour retrace, we continued. We had 2 candles retrace that 4 hour candle, we continued. We had a very relatively shallow retracement, but then it continued. Shallow retracement, relatively, bit of a square up, and that was it. Right? But all of these candles do have a small wick here. You see that? So far, if we look at price action on the 4-hour chart here, we have bearish, bearish, bearish with a big wick and double top, bearish, again bearish. This candle, 4-hour candle, closes. Let's take a look. This is London time. This 4-hour candle just opened. So it still has 3 hours and 20 minutes before it closes. So, I don't think we have to wait for that 4-hour candle. If we let this one finish, wait for a hook back, retrace, let it center before we enter, and then we still have 3 hours of downside before maybe the 4-hour candle is closed. Those 3 hours of downside, we'll have a 4-hour candle like that. That maybe that candle will get retraced by 1 hour and maybe another 3 hours downside, and then the next 4-hour candle will be bearish as well. Do you see how all those time frames fit into each other like that? The next 3 hours we could get bearish. That would close the 4-hour candle. Then we could get a retrace to, just a tad retrace to square up that 4-hour candle and then move down again. And you'll see these waves on all time frames. Okay, so that's any suggestions regarding the Aussie? What do you think? It's always risky to trade against such a big impulse. That's the advantage of a momentum trade, because then you already see the more momentum come in the market. Then again, we are at a big resistance spot, so I think it's worth, if anything, that is worth the risk, because otherwise we don't really have many options if you want to avoid the euro and pound today because of the interest rate, and the yen now because, the next hour or so or two because of the press conference. Well, then we don't have much choice, do we? Nothing to add? Okay, I'll still wait for a comment if you have something. In the meantime, I do want to mention something important, is that with those entry methodologies, right, you also have different types of trading, right? You can wait for a breakout, but you can also trade the bounce, right, instead of the breakout. The breakout, of course, then we have the opportunity for pullback and continuing. With the bounce too, you could actually take the exact level. That's level trading bouncing. Or wait for confirmation of a bounce, which would be a fractal break, for example. So even the bounce trade, bounce off a trend line or support or resistance, you have several ways of tackling that. Just like you have several ways of tackling a break, either taking the break, trigger happy as Tarantelus says, or waiting for the pullback, or continuation. The bounce, you could wait for, take the bounce or wait for the break of the bounce, basically. Or take not the breakout, but the break after the bounce, but the momentum trade after that, if there's more confirmed momentum. Okay. Good. New Zealand dollar, we can do that. Let's take a look. Yeah, it broke that resistance level, the daily resistance level we had here, and it put a daily candle close above that level. Obviously, we're in a range here on the daily chart with a strong weekly trend line here at the bottom as well. So yes, there is that likelihood of this continuing back to the top. Will it do so now necessarily? You never know, but it has done that, and currencies do tend to follow those patterns. So there is definitely that chance. We'll dive into the 4-hour chart now. You can see those higher highs and higher lows, right? So the only question here is, do we have a trend? Let's take a look at that. Step 1, trend. Day chart is a range, but the 4-hour chart is in a trend. So that's fine. Step 2 is opportunity. We are getting a pullback. Step 3 is filters. Not really, no filters there. Plenty of space to the next top or resistance. Step 4 is entry methodology. So once again, we're going to take a look at that. Yeah, indeed, Darshan. That's what I said as well. I don't know if you heard that. It took out the daily resistance, indeed, and put a daily close above that level. Yesterday's close was above that resistance level. That is also one thing you can always look at. If the close is not above a support or is not above a resistance or below a support, then all you have is a wick. A wick doesn't really confirm anything. If anything at all, it could be, showing a false breakout, right? That is not the case in New Zealand, because it has, if we zoom in here, it does have a close above the high, right? So I agree. It took out yesterday's, or not yesterday's high. That was a high of 26th of August. Oh, Darshan's talking about yesterday's high. Then, okay, Darshan. So you see that it will take out yesterday's high. Okay, yeah, sure. Yeah, it has the potential to move up here, definitely. Agree. Question is entry methodology indeed now? Okay, Darshan sees it go up today. Yeah, I get your point. Yep. Yeah, it's a strong bullish candle. There is some wick. We can measure that, but I don't think it's too significant. It's a 35 pip wick in relationship to 134 candle. What did I say? 27? No, 32. It's about 30%, if I did my math correct. So, but it does. Did I do it really correctly? That doesn't sound right. Because visually it doesn't look like 30%. 132. Let me get a calculator. No, it's 25%. So that's fine. Pretty big candle as well for daily candle. You don't want a small candle breaking out. Good size. Wick is not dramatic, and the close is above the resistance. So that's good. The daily candles is good. All those criteria are important and have been confirmed. So let's zoom into the 4-hour chart. We'll take a look at the stop loss and what could be good there. Well, we can put a fib on, of course. And we see we're at a 382 fib. Let's take a look at what the previous fib did. That was a 50% bounce. Went straight to the minus 618 target. You see that? 50, straight to the minus 618 target there. So now we can fib the next swing high, swing low, which is this. And take a look at confluence to see what would be the most likely bouncing spot. One level, of course, could be this broken top. Could be. Or this broken top at the 618. Right? Those two green lines there, those both could be the bouncing spot, right? We also have our band right in here. And those bands, by the way, are once again 34 EMAs. But then all of them, but the difference is close, open, close, high, and low. Okay, and I use them on all time frames, by the way. Okay, just be careful, Darshan. We have an interest rate, right? So just that you know about it. But you probably do. But just in case you missed that at the beginning. Okay. 1 hour has a band right here, actually. So that could be a bouncing spot as well. And we have the long-term moving average at the 618. The oscillator is returning to the zero line as we speak with a pretty strong reading. Confirming that this could be a 1, 2, 3, 4, 5. If that is a fourth wave, then typically we don't go deeper than 382 or 50. The max would be 618 typically. If it's an ABC correction and not a 3-wave, then in fact we should be fibbing the entire move up, because the B wave could correct all the way deeper, and then we see that we're not at the 236 fib, we're not at a 382 when we're at a 236. One way of solving that is waiting for a breakout. So we could wait for one more touch here, respect, and then take the momentum trade. That is a momentum trade if we wait for the breakout of a bull flag like that. A level trade would be right in here with a stop loss below here. Or a more riskier stop loss below the 618. Or the 786. Less risky. Those are level trades, okay? Confirmation trades would be waiting for a price action signal at the fib. So we want to see a 1-hour rejection or response to the 382 or the 50 to know that that's the fib they're looking at, not the bigger one. Well, we don't have that yet, as you can see, because we have bearish candles at the moment. And last but not least, we could, level traders could also maybe pick the 618, which is like close to the 50 anyhow, and then do a stop loss here, for example. That's one way of level picking. Now I'm always a big fan of momentum breakouts. That is my prime business. That is my core niche. So for me, um, that's my preferred setup. Not always is the environment ripe for that. That's why I do scan a lot of currencies to find that particular setup. But sometimes not everything is at that particular session like that. So that momentum break is not going to happen in our session because that's not going to happen in 20 minutes. So all that is left is either taking an entry order here at the 382, or planning one at the 618, or waiting for that 1 hour rejection signal. The 1 hour candle is going to close in 4 hours, for 4 minutes. So that will know soon enough. The 4 hour world is having bearish candles so far. So yeah, those are the options that you have there. I'll probably be waiting for a deeper retracement myself. Maybe let's see, because I don't think this is a 5 wave, because we're halfway a range. We're in a ranging environment, so I think it's more corrective. So I'll be planning for a deeper one. We can take a look if there's any supply and demand zone here. Not really. It's just one straight move up ever since that. So, one great level would be somewhere in here probably, although that's very deep. I don't know if we'll get that far. Probably one of the best levels is around, if we're level picking, probably 78.30, 78.25, 78.35, somewhere in there. We have the top, we have a long-term moving average, we have the 618. That could be good. You can see if we bounce off the 382 and move up, if we bounce at the 382, this is going to be funny. You'll find this funny. If we bounce at the 382, where I have the green line, then move up to the 618 retracement, then extend the correction down to the 618 fib. What is there? A minus 618. There's that confluence between the 618 and the minus 618, the fee ratios. So something like that could be very possible. You see that? Up, down, up, back to the trend line, respect the trend line, and then break. Regardless if this is going to happen or not, it's just an educated guess. It's just a tree path of the path of least resistance that the currency typically does. Right? The currency always chooses the path of least resistance. That's where it naturally walks to. Regardless of if this is indeed the path that is the least resistance, which we will find out sooner or later, but whatever it is, if it breaks that purple line, that is a momentum trade. If it bounces off the 382, that is a confirmation trade. Just be careful though of the trend line, because that could send it deeper. That's all. If you do take the 382. Unless you put your stop loss all the way down here, then it doesn't matter, because the 618 will bounce and your stop loss is safe. If you use a tight stop loss, then you have to be careful of that trend line. You see that relationship between trade management and where your stop loss is as well? I'll repeat it one more time. If you take the 382 and you put your stop loss all the way down here where I have the red circle, you don't have to be that careful of the purple trend line, even though the purple trend line could send it lower and make a deeper retracement to down to the 618 fib. Your stop loss is safe, right? If you use a tight stop loss, where we have the blue circle, then things matter, because the purple line does matter, because if we move up and we don't break, we do have that, as I said, we can retrace deeper, we take out your stop loss. If you have a tight stop loss, you want to see a break, and if it doesn't happen, you want to get out for 0. So, stop loss definitely important, even if you're a level picker in your trade management. So I don't know. I'll put a pen. I'm not really a level picker, but I'll do the 618 here and the minus 618 confluence. If I mean that's not a finished fib yet. Let me take that off to avoid confusion here. Let's see how that works out. I know traders that are great level pickers. I've never really focused on it that much. I really, as I said, really found my niche in the momentum breakouts there. But unfortunately, this is not much of an intraday trade so far, which is our focus. Spread only a pip here, by the way, under the Kiwi. So if you look at, if you're not trading with Admiral Brokers, take a look. Because that's great spreads here, okay? So definitely take a look there. I got corrected by Darshan. I said it wrong. It's niche. uh, the target. Well, the minus 618 target is always a good one, of course. But we have the top of the range. I wouldn't be aiming exactly for the top. Let's put a fib here to the downside. So we have targets and the retracement. We have a 786. I think that's a nice target together with this minus 618. $80.46, just below the halfway mark there. That would be 209 pips reward and a 65. That's a 3-to-1. That's good enough for me. Let's try it. Or I'm trying it. Let me say it this way. That's level picking, so fingers crossed there. First of all, we have to get in though, but okay, we'll see. So that's a level picking. I mean, doesn't mean that you cannot keep an eye on the confirmation, of course, or the breakout, right? What type of trader would you think you are? What Darshan, for example, and anyone, Graham, anyone who wants to answer, what type of entry methodology do you use the most? Now, I know we talked about it a lot today, so I might as well ask you. We should have taped it and called it the entry methodology webinar here. But that's because we don't have any currency pairs to look at today, so we could take a look at the odd New Zealand as well. So maybe you lost track of what I said. The question is, what would you consider yourself the most, or are you a mix? Are you more a level trader? Are you a confirmation trader, or more a momentum trader? For regarding the entry methodology. Okay, Darshan. So Darshan is more of a trades more all these different types of methods. Mostly, mostly the levels that Darshan chooses is fibs, though I think. Pavel is for momentum. Piotr is for level. Okay. Darshan says definitely more trading than swings. Kalen is more of a level trader. Interesting. I'll actually make a poll for that next week. We'll measure Tuesday because I'm more of a momentum trader, so I can imagine that I don't really look for levels. I mean, I recognize levels, which I think are important, but I wouldn't trade them that much. By the way, regarding the polls, before we take a look at the odd New Zealand the last 7 minutes, if you could still answer, I know that some of you already answered that yesterday, but if you could do it one more time, because we wanted to measure that at 2 different sessions. So the question is, there's a poll in front of you. The question is, would you like to see the room focus on one particular type of trading or have it more diverse? And the answers are, I like swing trading, but multiple strategies. I like swing trading only with more focus with 2 strategies. I like intraday trading using multiple strategies. I like intraday trading using only 2 strategies. Or you like a mix of intraday and swing trading. So if you like a mix, that's the last answers for you. If you like swing, you have to choose between 1 and 2. If you like intraday, you have to choose between 3 and 4. And then we'll go back to the odd New Zealand and see if there's anything interesting. So not many of you have voted. So if you could be so kind to choose one of those, that would be really great. I do appreciate that. With this feedback, I want to get an idea what types of traders there are, because I do think that if there's a majority of you are level traders, level swing traders, well then, I wouldn't mind focusing on that a bit more, So I am curious what kind of audience we have. It could be a wide mix. That is very difficult for me, but anyone else there who still can participate, that would be great. All right, I'm going to close it up here. Thanks for your answers. Thank you, Piotr. That, very much appreciated. Thank you so much. I always like that, to hear that, of course. So this is the odd New Zealand. And the odd New Zealand, we're really showing a pretty aggressive up move. If you look at what happened here, this down move, our band doing a pretty good job of containing price all the way here from mid-March to right in here. But look what happened. We broke out of the band, and now what did the band do? It wasn't resistance, but it became support. So the target is the long-term moving average at 118 here. It's also a bottom, right? So there's some space to the upside there on the odd New Zealand. I do think so. You can see that the weekly band is around that area. You see that these time frames all tie into each other, right? So that could be the target here. We've extended pretty far on the weekly, so it's maybe time for a retrace on the weekly. A retrace on the weekly is a trend on the day chart and 4-hour chart. You see that? It's okay that it's a retrace on the weekly because we don't use the weekly for defining the trend. Or I don't. I use the 4-hour and in combination with the day chart. Day chart and 4-hour chart are telling me that they're an uptrend. Right? We have higher highs, higher lows on the day chart. We're above the band. 4-hour chart, we're not only above the band, but above the long-term moving average. Furthermore, we can make a trend channel extra confirmation, right? Trend channel is maybe a bit narrow at the moment. So we're about halfway, just a bit above halfway. Now, if this trend channel were to, if the price were to, break through the top of that trend channel, then this thing is just even getting more impulsive. If not, well, then it probably just, then this trend channel is still a good channel. It could bounce in between this channel, keep on going up. That's fine for me too, no problem. And if this channel breaks, well, then there's more, more continuation of the weekly downtrend, basically. Okay. Now I do want to put a red line at that target, what I think is a target here, or at least for sure it's a resistance. I mean, to phrase it conservatively, it's definitely resistance, right? Because not only it's a big top, well, we can maybe even put a red line here as well, because there's a top right there and also a bottom here, and a red line way above, but that's higher. That's the weekly. Anyhow, so those are levels that we want to be careful of, right? Because even though we're in an uptrend, doesn't mean we're going to be blindly buying at any spot. We're not going to be buyers at any price. We've established that we're in an uptrend, but now we want an opportunity. The opportunity is a dip. In this case, it's a pullback. Because we buy on dips, right? We don't want to buy right in front of resistance. That's why we want to know these levels. Okay, so that's the 4-hour world. Let's zoom into the 1-hour world. Okay, prices is above those moving averages. Here too. So I would say if we put a trend line on that, and we break that trend line, oh, I hate that when it happens. Okay, the trend channel got pulled. Okay, if that trend line breaks, I do think it's a good momentum breakout trade. So that's a typical example of a good momentum breakout trade. I like that. That looks good to me. A level trade in this case would probably be, for example, somewhere in here upon a bit deeper retracement. For example, at these tops. Just above the minus 618 target of if this were to be an ABC correction. A confirmation trade, let's see, could have been maybe upon these engulfing 4-hour twins. On the 4-hour chart, let's take a look at the 1-hour chart. 1-hour chart had engulfing twins as well. We don't have it now because that was in the past. That was a confirmation there, but all right. So those are the things we can look at. So the 50-minute world, to look at the maybe the momentum break. 50-minute world, odd New Zealand. A breakout here with a stop loss below the 50-minute fractal would have a risk of 20 pips. Now the spread is extremely tight here for odd New Zealand pair. It's only 2.5 pips, which is very low for an odd New Zealand currency cross, which is because it's quite exotic. So if we include the spread and 1 pip below it, we're looking at a 25 pip stop loss. Usually with a momentum breakout, I think my ideal target is 2-to-1. And if you get 3-to-1, then that's extremely well. But we can put a fib on to see what that would mean. We would have to use this as the fib, and we see we're at the 3-to-2. We bounce off the 3-to-2. See that? 3-to-2 fib. Target of the 3-to-2 fib, the first target is the minus 272 at 117.07. If we take the breakout, it's 116.25. That's an 82 target, and we had a 25 risk. That minus 272 is a 3-to-1 trade. So that looks good. So yeah, looks good to me. I'll punch it in. Unfortunately, we have to close though now. So, but let me tell you that if you like this trade too, one thing I want to mention is that if this level gets broken, 116.03, let me put a thick green circle around it. If that 50-minute low breaks, if price were to go through it, I'm first of all deleting that trade because stop loss isn't valid anymore. Very important. Step part 2 is that if you get to this top, there's a high likelihood I'm moving to break even. And if we get a 15-minute fractal above the trend line, or anywhere actually, 15-minute fractal, especially after the first 2 hours have traded, then I'm moving that stop loss underneath the 15-minute fractal. But if I'm up that much, there's a high likelihood I'm going to move it to break even. If I'm up 1-to-1 at a top, then most of the time just either wait for the break to the target, or I want to wait for the break to the target, but I don't want to risk anymore. That or move it at least to the next 50-minute fractal. Okay, but that unfortunately Yeah, 160, 160.95, for example, will give 70 pips versus 25, just a tad less than 3 to 1. So those levels are the ones I'm thinking of here. Okay. Any questions? Anything you want to get a extra clarification, or you might wonder? Be careful today, right? We talked about it intensively at the beginning, but just in case you missed the beginning, you got euro and pound interest rates, and tomorrow and today also ADP, tomorrow NFP. No, we didn't look at pound New Zealand. We only looked today at the odd dollar, dollar CAD, odd New Zealand, and one more. I forgot. Oh yeah, thank you. New Zealand dollar. New Zealand dollar, Aussie dollar, odd New Zealand, dollar CAD. Yeah, that's it. Because it has the pound, I didn't even want to focus on it. We did take a quick look at the euro and pound. So what is it? We can take a quick look now though. Pound New Zealand was in the range. We broke the range, but we're back in the range. And if you look at the daily chart, what do you see underneath that range? A wick. So I wouldn't consider that yet I would not consider that yet a sustainable breakout of the range. The only thing that it broke out with is a wick at the moment. So for me, the pound New Zealand is still in the range. And it has to break out one of the two sides before it gets interesting, but not today. I'm not really looking today because of the interest rate. Maybe a few hours after that. Pound yen has the pound in it, so I'm not going to trade it. But it, yeah, it did push up a lot. We identified that, right? The likelihood of continuation. I was just looking for a momentum break, which we never got, in fact. So that's sometimes the disadvantage. It doesn't happen too often, but it sometimes can. This kind of like slowly but surely moves to the upside. It was really not a clear break. But if you're a level trader then and you picked a level here, then you're doing very well. Euro dollar, if I can comment on that, sure, we are in a downtrend. We're halfway, just above halfway to range. If we break 131, the support at 130, maybe we'll make the fall right in one shot to the bottom of the range. Otherwise, at one point in time, I do think we'll get a hook back, a retracement for more fall at one point or another. We'll see if that happens, though. Could be if the euro dollar doesn't, if the euro keeps its interest rate at 0.5, could maybe have a positive effect. I don't know. I'm just speculating there. But to me, it's in a downtrend on the day chart and 4-hour chart, and it's in a wedge on the weekly chart. It has the potential to fall back to the bottom of the wedge. That's the quick version there. So I wish you all good trading today. No, I think odd New Zealand, odd dollar, dollar CAD. I mean, you can trade anything. It just depends how you trade. First of all, if you're scalping, there could have been maybe some movement still, because it's still 3 hours from now. I think there could have been maybe potential to scalp. I don't know. Let's look at the minute chart here on the euro. Well, it didn't really do much the last 3 hours. You see that? It's just perfectly quiet. So yeah, even scalpers will have a tough time. Anything that doesn't have the euro or pound, that's I wouldn't trade anything I wouldn't trade anything that has euro and pound just because of the interest rate. I don't trade the. I really dislike it to trade the interest rate decision. But if it's a couple of hours and we don't have any press conference left anymore, then the euro and pound become free, in my opinion. If so that's like after the press conference, then that would be things could settle down again. Oh, I lost my microphone. I hope you still hear me okay. That leaves the dollar and maybe the yen. The yen had a conference, so that's why press conference. What happened? Interesting. Again, to trade the yen. The dollar has ADP, but okay. The more important thing is then I would preferably get it all. Something. Okay now. Well, then I guess we have to stop. And now? Okay. Good. Yeah, the microphone broke off, so I had to put it back, but maybe I didn't put it back properly. So let's see if this level picking works on the New Zealand. And oh, the odd dollar. Oh, forgot about that. We should have looked at that half an hour ago. Totally forgot. Totally slipped my mind at the top of the hour. But yeah, it didn't get much of a retrace. So that plan wasn't too good, or it was good, but it just didn't materialize. Right? I was looking for 91.52. It didn't retrace to 91.52. It just dropped. That sometimes can happen. So in this case, the break was a better idea, probably around 91.46. We would have been up 15 pips. What can we do? Sometimes that happens if you plan for too many retraces. You don't get that retrace. The dollar CAD broke that high, so maybe it's the first attempt to make that upside. As I said, I'll be especially looking for something of a break of this trend line. Odd dollar, that's my primary interest on the dollar CAD. Odd dollar, that slipped by, but maybe we can get a hook back. New Zealand dollar pending order for long I have, and the odd New Zealand pending order for the break here of this trend line, right? So beware of that trade management. I wish you also good luck and lots of pips if you do trade today. By the way, I do know a lot of traders that don't trade any of these 2 days and take a holiday. So just so you're aware, don't feel necessarily pressured to trade today or tomorrow if you don't feel for that, because a lot of traders don't because of that. So just that you know that. A lot of intraday and swing traders, unless you're working at a big bank and you have split-second reaction possibilities to the news, many people don't trade. And don't forget the trade management rules with this, okay? Don't want you to get stuck in something here. Alrighty. So that wraps it up then for today. I'm actually Dutch, by the way, but I live in the Czech Republic, partially at least, not fully now. Also partially now in Ireland, in fact, but that's a different matter. But where are you from, Darshan? Yes, my name is indeed Czech, though. That you saw correctly. Because my my passport is Dutch, let me say it this way, but I'm actually half-half because my dad is Czech. So that is true. Okay, Dasha, cool. So I'm close by to you then at the moment because I'm in Ireland at the moment. So if I ever visit the British Isles or the UK, then I'll let you know. Cool. Alrighty, folks. Have a great weekend too, and see y'all tonight, hopefully, right, with the risk management webinar. Cheers.